Welcome to another Hobo Talks. On this one, we're going to talk about our friend Big Bear. And boy, oh boy, it's got me kind of feeling like,
You were the chosen one! It was said that you would destroy the Sith, not join them! Bring balance to the Force, not leave it in darkness!
I don't know if you're like me, but seeing all these red days on Big Bear is a little bit disheartening. Not going to lie. I really haven't seen anything like this out of Big Bear. For the most part, they've been kind of doing what they need to do. They've been putting out a good amount of positive press. They've been able to grow usually their revenues, usually still negative, but working towards a positive angle. Haven't seen any reverse stock splits or any of those things that really causes the stocks to often fall. And I understand reverse stock split in itself doesn't necessarily do anything to the stocks, but it does give people a bad taste and it does cause some people to sell. And as you can see here, the main driving force is that we finally have, a decent amount of bad press. And it all had to do with the Q2 earnings. And basically, I mean, just to put it quite simple, they didn't hit everything they needed to hit. And in fact, they actually put out some negative information. Part of it has to do with Doge and Doge coming in and saying that some of the contracts that they were doing with Big Bear were simply not necessary. And that's part of what Doge is doing. It's cutting back on useless spending. That is a little bit of a crazy thing to me because I thought the government was all about shoring up the borders, and that's one of the main things that Big Bear does. Needless to say, people were not happy with all of that news, and the price dropped about 28%, just shy of it. It has since recovered a little bit. Let's go over here to this chart. So, this chart is of the last month essentially. So, we're going back to August 4th until now. So we were flying up here in the six and sevens, and then we dropped all the way down to basically five. I was gonna say we went a little bit below $5 from what I saw yesterday, but did end above five. So that's at least good that it was able to make it back above five. I believe if it hits $4, you're either going to see one or two things. Either people are going to start loading the boat, saying, "Hey, this is still a great deal. Let me get in," or people are going to jump out because you got to remember some of those people were buying in as this thing was on this rise up. So if we go back here to 6 months, you can see here we were down at this $4 just a few months ago, around May, and then it really started to take off. So all these people that bought all the way up here, maybe bought this dip, maybe bought that dip, maybe even bought on the way back down. If it continues to get back to here, which was the previous support level, they may just jump out. No, this blue line here is the 50-day moving average. As you can see, it was making a sharp climb up, which is what you want to see. But now that things are going back down, this will also go back down to kind of average out with it. I am not the biggest chart guy in the world. I don't know all the signals and all that stuff. It's one of those things I'm still trying to learn. But at the absolute minimum, the one of the more simpler techniques and strategies you can have out there in the world. And I think everybody needs to have a strategy. You need to know if you're going to be a growth investor, are you going to be a dividend investor, are you doing long term, short term? What is your goal? Because if you don't have a goal, then you're just chasing the next run, and that really doesn't benefit anybody. But one of the more simpler things you can do is a moving average like this. And quite simply, if it's below the moving average, that's probably a good buy. If it's above the moving average, then you're kind of chasing a number. Because at the end of the day, especially as this stretches out, or if you make this like a 200-day moving average, this the bounce usually tries to go back to the line. I mean, this stock hasn't been around forever, but if you kind of look at it, even kind of scrolling back, it stays right around the line. Sometimes it dips below, sometimes it goes above. But usually speaking, it comes back to the line. So right now, the way it is, this looks like if you're buying Big Bear right now, you're basically paying too much. As just a simple way to look at this. Now, Big Bear with its price being so low, I mean, depending on what you think will happen with the stock, this could be a great buy. I wouldn't be mad at somebody for buying around now. I might would wait to see if it dips a little bit closer to $4 at this point, with it having dropped so much, especially if you look at like the last 10 days or even the last month. I mean, it's kind of the same thing. Even if you have a green day, it just, kind of goes green, red, green, red, green, red. And even if you get a couple greens, the red's right there to knock it back down. So I wouldn't be going in all crazy on Big Bear right now. Me personally, not financial advice, just my thoughts. My thoughts. So here are some of the things that really hurt them, right? So their forecast, they lowered it. They said from 140 to 125, which previously they were saying 167, which is a very specific number. But with the contracts being pulled, they have to take that into account. People don't like this. You say I'm going to do less money than I was planning to do. The share will drop. They also came out and stated that they did less revenue than they did the previous year. If you look back 12 months ago, you would have seen a bigger number than what they have right now. That's also a bad sign. AI and anything that's related to AI for the most part has been booming. But Big Bear, for whatever reason, hasn't really been getting a lot of that drive, which I think there's some good and bad of that. The good is they're not doing this as a meme stock. Meme stocks will blow up for no reason, no news, no fundamentals. Things will just take off sometimes. And if there's not enough under it, if the company can't sustain it, then you get hit with a sharp drop. On the flip side, sometimes there's customers like, or there's on the flip side, there are sometimes companies like Palantir, which fundamentally don't really make sense. If you're looking at their numbers, how much they're bringing in, but the stock just keeps climbing, climbing, climbing because they are able to basically be a leader in this space and they're able to show off all the great things they're able to do. And people are willing to take that ride. But fundamentally, their price should not be in the hundreds. Pretty much everybody knows that. But hey, if that's what you're willing to do, if you're willing to potentially lose that money, why not? Has been Big Bear has benefited from some of that. Big Bear currently is not a positive company. They have put out a decent amount of news. They have put out a decent amount of contracts, and they've done some good things to represent growth. Now, have they done enough to go from a low within the same year, 52 weeks of $1.29 to $5, or even when it got up to $10? I think that was a little bit of FOMO. That was people just kind of jumping in and doing and just not wanting to miss the boat. Now, I was one of those people that got in around $1.50 originally. I did sell it around $6, but that was after watching it go up to 10. And I took a gamble that it would come back down to 3 and I would buy back in. And eventually it did. So I jumped back in around $3, I think 3.22, and I said I'll just hold it. I think this could get up to $40, $50 at some point, maybe even 100 one day. And I wanted this, as the opening said, to be my chosen one. I wanted this to be the stock that I held for 10 years. And essentially, not to say I have enough shares to make me rich, but enough to make me comfortable. As you can see here, I have 1,100 shares. And this is a pretty big chunk of my account. 325 a share. I basically spent $3,500. So I put a decent amount in here for a hobo. This is a pretty decent amount of money. I'm taking a gamble. And as you can see, I am up 54%. Now, every day, this number hits this number and keeps dropping it. At one point, it looked like I was a genius. Like we're at like 300% and all that kind of stuff. But It's just part of the stock market. So anyway, I don't want this video to be too long, but my final kind of words on this is don't give up on Big Bear. If you got into it for the right reasons, if you got into it because you believe they can and will be big in the future, then stick to that. Like I said, you need to decide what kind of investor you are and why you got into this. If your reason for getting into it is the same, then it's better to stay the course versus jumping out trying to jump into something else. Because more than likely, when you jump into the other thing, it seems like all that happens is it turns around and starts to decline. Things start to fall, and that's not what you want. Realistically, seeing the sentiment of this, and I've seen it online on X and different platforms, I really haven't seen it look this bad in a while. Kind of reminds me of our old friend Medical Properties Trust. And AI and what Big Bear does is something that has a place in the future. How big of a place? Who's to say? Anyway, in case you didn't know, I's a hobo. Thanks for watching.